In the financial services world, there are all kinds of tools to use to help you be and stay retired. But I wanted to ask a financial advisor, when does he think it's appropriate to use a tool like an annuity? I'm here with Robb Rothrock. He's the founder of the Rothrock Financial Group. Robb, we've done a series of videos, so once again, I want to say thank you for letting me learn from you in this series.
This is fun.
As a financial advisor, how do you feel about annuities? When is it appropriate to use one of these?
Well, I think annuities have to serve a purpose. There's an annuity has to fit a specific need of a financial plan. And one of those might be guaranteed income. One of those might be, so there are several types of annuities out there. I'm not a big fan of variable annuities because typically there's high fees in those and there's some market risk in those. So I don't like those. I mean, we already have people that, most of our clients are in the market to some extent anyway. So why add more risk in an annuity? To me, an annuity is about guarantees and about safety. So it's appropriate. You could take two different people that are the same age, they're retiring next year, they have the same amount of money saved, and they have the same budget, and one of them might like an annuity solution to be part of his plan more so than the other one. So part of it is about the risk tolerance of that client. Annuities are great at providing guaranteed lifetime income, and that's one of the reasons or the uses that I like the most, because it can offer a higher rate of return on that money than just about anything else. And we can actually use the word guarantee in that conversation. You can't use the word guarantee when it comes to stock and bonds and things that are in the market. So if some people like the idea of supplementing their guaranteed Social Security income. Maybe they have a guaranteed pension, and to add another leg of guaranteed income with an annuity that can be not just for them, but if they're married, I've got plenty of married clients. So if one of them passes away, and we've had this happen, well, the surviving spouse continues to receive those payments for the rest of their life. So that's a big comfort to a lot of people. So for that specific purpose, and there's other annuities that I like that can offer a specified guaranteed rate of return for a specified period of time, which is a good alternative in some cases to bonds. So those are the types. Those are the situations that I like them.
Through some of my own family experiences, I found that the long-term care world and long-term care tools are different today in insurance, but I've heard of long-term care riders that you can put on top of these. How do you feel about that?
I think they're terrific because, again, the traditional long-term care insurance has unknowns because long-term care insurance is built on, in most states, is filed as health insurance, and health insurance premiums can and do go up. And you buy a long-term care policy, the underwriting is very, very difficult. There's not that many companies that do traditional long-term care insurance anymore because there were, back in the 90s and 2000s, there were so many companies writing these. They underestimated longevity. They underestimated healthcare inflation. And so most of those companies no longer write policies, but people that still have those policies have gotten multiple rate increases in the mail or benefit reduction notices or both. So you're buying something and you don't know what you're getting. With an annuity, with an annuity that has a long-term care rider, that you have a guaranteed future long-term care payment. So there's no ambiguity about what you know exactly today what you're getting in the future. And those are tax-free dollars. So you're taking a certain amount of money today and leveraging it because of a law passed in 2006. It makes those future long-term care benefits, which is many times what your initial investment was, becomes a tax-free stream of income to pay for long-term care. And it doesn't mean a nursing home either. It might be, most of the time it starts at the home or in the home. In fact, not to go in another direction, but we've personally seen this on two separate situations. We've had 2 hospice situations in our own home over the last several years. And I've seen firsthand with my wife's parents, we've seen firsthand what this is like. And when you have emotional stress, it's not just financial, it's everything else. People think it's just money. There's so much more. We had the first time we had young kids. We had a 12-year-old in our home that saw this. And when you have, so if you know the finances are taken care of, there's already enough stress and strain and emotions going on in that situation. So let's not make not having the right plan add to that.
Right.
So I really am a fan of those annuities because of the amount of money you can get on a tax-free basis to use for that just takes another stress point away.
And once Thank you so much for sharing your personal story. As a financial advisor, this would just be maybe one of the tools that you would use together in a complete plan?
Yeah, absolutely. Yeah, there's never one tool rarely solves the entire plan.
Yeah.
So what we like to do is in an initial meeting with somebody is we're going to want to find out what they've got, what they've saved, more importantly, what's important to them. Some people have a lot of things they want to do in retirement. I want to go, I finally want to travel. I want to go to Europe for 3 months. I want to go to Asia for 2 months. They want to do these things. Maybe there's a future wedding. I mean, we see that a lot, actually. Yeah. And well, if that's the case, then let's make sure that the money's there for those things. Other people are very specified and very budget conscious about what they spend, and they know exactly, so we can plan for that too. But we always like to make sure that the plan has flexibility because things change, life changes. We don't like to do one plan at the beginning and say, oh, that's your plan, that's it. Because things are going to change. Life happens all the time. So any good plan needs to be reviewed annually at the least, first of all, and second, needs to have flexibility and have a little, maybe even more than a little bit of wiggle room to just like we talked about earlier, for inflation, for living a long time. We want to make sure that that plan can withstand all those events.
All right, Rob, thank you so very much. Is an annuity appropriate for you? It really depends on what you're trying to cover in your life. One of the best things you can do is speak with an independent financial advisor who has your best interests in mind to evaluate what you need for your situation. If you'd like to do that, you can call the phone number right now on the bottom of the screen and schedule your no-cost complimentary income plan review. Or if you want, you can schedule your own time at Robb's website, rothrockfg.com. Thanks for watching.